Bitcoin investors should be very concerned about the cryptocurrency, as recent revelations have brought to light several different vulnerabilities and concerns with investing in the cryptocurrency. But the latest news here is about what the BlackRock CEO said about the, quote, digital gold. We'll talk about all of that and so much more as we explore. Gold is what you're seeing displayed here. Now, we know that gold is tied to a lot of different investments out there, from mining stocks to ETFs as well. But nonetheless, the physical metal itself is something that is compared with nothing in terms of being a safe store of value. Central banks know this. But cryptocurrencies are something that have evolved over the age. In fact, there's thousands of them out there, with the most popular one being Bitcoin. Well, a lot of people were very skeptical about cryptocurrencies early on, and the BlackRock CEO, Larry Fink, was one of those. But we're going to talk about what he's been saying most recently about Bitcoin in particular. And I think it should essentially scare major Bitcoin investors into looking into gold as an alternative to Bitcoin, of all things. And this is just the latest in a lot of different things that have come into light about Bitcoin in particular, and pretty much all other cryptocurrencies, the potential for what could be. And it's something that I have thought about for quite some time. There are some viewers on my channel who are very, very pro cryptocurrencies, and Bitcoin in particular. And I don't want to dissuade you from the speculative nature of making money on any stock or any cryptocurrency out there. There's no question that there is potential for an increasing rise in prices. But people that make the comparisons of Bitcoin to gold, really the only difference is it's, quote, decentralized. And even that is something that I think is going to change in due course, especially with increased regulation. And that's one of the aspects I'm going to be talking about here, because as the wheel of time continues to go round and round, well, there's a lot of different things that are going to be happening that are going to restrict cryptocurrency usage down the pike. I'll get to that in a moment. But in an interview with Fox Business, Larry Fink, the CEO of BlackRock, which is the world's largest asset manager, drew parallels between Bitcoin and gold, claiming that the cryptocurrency is essentially digitizing gold. Since the start of 2023, Bitcoin has made an impressive rally, posting an 83% rise. The move is particularly noteworthy considering a significant portion of the gains happened after BlackRock filed an application for a spot Bitcoin trust ETF in mid-June. The firm's application stands among many others from industry heavyweights like ARK Instress Eco, Van Eck, and Grayscale, who are all seeking regulatory green lights for similar crypto products. BlackRock has a strong track record with Securities and Exchange Commission of the firm's 576 ETF applications. Only one has been rejected. We know that BlackRock has their hands in all sorts of different things in business. And yes, even the gold market as well. They have a heavy hand in mining companies. They have a heavy hand in bullion companies, such as A-Mark Precious Metals and others. They have influence everywhere. They're the biggest. They are the biggest of all of the heavyweights, for sure, out there. And that's something that is a concern, even for those of us in the precious metal space. However, again, I draw back to why people should consider having some gold in their portfolio in order to diversify their holdings, because gold in and of itself cannot be manipulated. It's in your hands. The price might be manipulated, and we've seen evidence of that with J.P. Morgan, and who knows, maybe BlackRock had some aspect and some part to play in that as well too. But nonetheless, gold in and of itself does not have an agenda. It exists because of its very nature for thousands of years, and that will never change. The risk for buying gold in physical form is the premiums you pay. You're not going to get those premiums back for the most part. You have to wait in order for you to break even, you have to see the price rise enough to swallow up those premiums, adjusted for inflation over time. That's the big single-party risk that you hold, as well as securing the metal in your possession there. Nonetheless, let's go into a little bit more about what Fink has been saying here. What does he believe? He believes in the potential of tokenizing assets and securities, seeing it as a next revolution for the finance industry. Their company, his company, is optimistic about making investing more accessible, specifically for Bitcoin and other cryptocurrencies with its ETFs offerings. So they're going to have essentially a digital representation of a digital asset. That's kind of fascinating, isn't it? Imagine how many of these ETFs will be derivatized, if that's such a word, creating a derivative of a asset that has limited offerings, 21 million of them. So it's going to create a derivative of an already digitized asset, whereas gold has a limited supply, and its limitation is how much can be mined out of the ground per year. And that will change. It'll be fluid. There's not going to be any more than 21 million Bitcoins. They tell us that, but we know about forking and we know about other cryptocurrencies. We've also learned other things about cryptocurrencies which should have already scared many people away from Bitcoin into gold before, and I'll get to those here in a moment. But Fink shared some skepticism about cryptocurrencies due to their early adoption for illicit activities. However, he has since shifted his perspective, recognizing the value of Bitcoin as a hedge against inflation and an international asset not tied to any one country. Well, I disagree with him about it being a hedge against inflation. It's not. It's a speculative asset. Nothing more, nothing less. And it is decentralized, but it is based off of a foundation of the blockchain that is no longer anonymous. It can be tracked. And this tracking can be tied, as the FBI now can track Bitcoin purchases for illicit activity. And that is why he's shifting his perspective. Now, most of us that are watching this video would not use Bitcoin for illicit activity. But nonetheless, the very fact that it is no longer anonymous and no longer really totally private means that it's taken away a lot of its selling point, the selling point of having Bitcoin in your portfolio, because it is completely private. It has no risk, no counterparty risk, but it has complete counterparty risk now, absolutely and utterly complete, whereas gold does not in the physical form. So when you buy gold and you hold it in your possession, you are essentially declaring independence from all the institutions out there. That's something that a digital asset cannot. It's got to be reliant on something, even if it's just some source of power at any given point in time. Because even if you have a hardware wallet, sooner or later it's got to be plugged in somewhere in order for it to be redeemed or transacted. And so that is something that I think is quite scary. And you also have to think about what the BlackRock CEO said. And again, this is from Fox Business as well too. That has been seeing some backlash from over a 2017 comment admitting that his company would force behaviors on inclusion efforts amid a rise in pushback against companies making environmental, social, and corporate governance, and also governing governance, in other words, tied with the government itself, whatever governmental entity that could be, on behalf of everyday Americans. And so while sitting alongside former American Express CEO Kenneth Chenault in a resurfaced 2017 New York Times interview, Fink revealed BlackRock would force behaviors on gender or race and threaten impacts to compensation if diversity, equity, and inclusion standards weren't met. And I quote, "Behaviors are going to have to change, and this is one thing we're asking companies. You have to force behaviors, and at BlackRock, we are forcing behaviors. That should scare every American and every person around the world. And this is why we hold gold to be self-evident, because gold is indeed, by its mere existence, is something that does not have these kind of standards. It doesn't care if the owner of the gold is black, white, or transgender. It exists because of what it is. And that is remarkable, because that's something that no amount of DEI or any other kind of political influence is going to have on the metal itself. And this is why the BRICS nations, one of the reasons why the BRICS nations are emboldened to de-dollarize, because many of these nations are not a part of this ESG movement. And, as much as I am against a lot of what some of these nations stand for, I certainly applaud them for that. There's no question about it. And this ESG and DEI, which is under the umbrella of ESG, is something that is becoming more and more prominent these days. And when we are seeing companies out there like even Budweiser, who essentially, with their Dylan Mulvaney ad, they have basically essentially been a part of what's going on with ESG. That's the example of it. And now it's hurt their brand. And we're going to see probably more and more companies, especially nowadays, that are being tied to this and enslaved to ESG. And they're going to be forcing it all on you and I, forcing our behaviors, forcing their morality on us. And their morality, many of us feel, is very much immoral. And so there's no escaping the influence of BlackRock, because it's everywhere. Every time you buy an ounce of gold or silver, more than likely you're buying it from a company that is tied to BlackRock in some way. And whenever you buy a mining stock, whenever you transact, there's no way to escape it unless you completely unplug. But you know what? I'm going to continue to stack precious metals, because when I have the metal in my hand, it indeed is a metal that is going to preserve my wealth and sanity, I think, for quite a long time. Well, for eternity. It's going to be passed down to other generations or sold back and to help at a given point in time. And that transaction, whenever I sell that gold back, the person who buys it is not going to care whether or not I'm compliant with some sort of ESG standard. So I encourage you, if you are a cryptocurrency holder, to maybe consider maybe putting a little bit more money into gold. And I'm not saying people should abandon cryptocurrencies in general and Bitcoin specifically, but I just think you should rethink your stance. I would never want to scare you into buying precious metals, but there's a lot happening in the world today that should scare you into buying precious metals, and gold specifically, especially if you are in a speculative asset like Bitcoin, which, by the way, in my closing thought, and this is the thing that should scare you the most, and I think that in a sense, the CEO of BlackRock, Mr. Fink, is pretty much ushering this in, or maybe even speeding this up. Because as these big corporations are so tied and in bed with crony capitalism, with the government, the United States government, it's only a matter of time before they put the noose around the blockchain tied with Bitcoin and cryptocurrencies, when central bank digital currencies come on board, and then it's game over for cryptocurrencies. They can make it illegal. If you think that's not going to happen, well, I think you're living in a dreamland, because it very well could, because central bank digital currencies are coming. And what's the biggest the rival to that? That's a cryptocurrency that is cryptic, and they don't want anything cryptic. They don't want anything that they can't control. They already can kind of interweave their way into that sphere, but they want complete and utter control. And so that means that they will do their best to ban it in due course. And that's not going to be good for the price of cryptocurrencies. And especially if they find ways to complete and defuse it, completely defuse the blockchain, which I would not be surprised if they could do, especially if they can already track transactions with it for illicit activity. Then it's only a matter of time before that occurs. They cannot defuse gold. They cannot take it away. So there you go. So gold, I believe, is the ultimate answer to any kind of fiscal and monetary woes that we are seeing in this country today and around the world. Let me know what your thoughts are in the comment section below. Hope you found this video informative, insightful, and educational. I would like to encourage you to please rate, share, comment, and subscribe.